Hey, what happened to the music? Hang on. Well, you know what? Let's just go. Alrighty, good morning. Welcome to Forex.Today. Let me remind you that trading is risky. It's not appropriate for everyone. No. Your past performance, good or bad, is not indicative of future results. Friday might have been awesome. Today could have been bad. Can be bad. Friday could have been bad, but today could be awesome or mediocre or somewhere in between. Therefore, always stay small. Stay humble. Focus on the long term and never risk money you cannot afford to lose. Hey, good morning. How are you? My name is Wayne. I'm a currency trader. Been doing this, let's just say doing live streams for almost 20 years. How amazing, huh? Not just trading Forex, but sharing what I have learned to you. That's pretty cool. So anyways, what's the raison d'etre? Well, to me, I want to teach you how to plan trades the way that I learned. I'm self-taught. So I did a lot of things wrong for a while, but then I figured out a few things that are actually pretty good. That's great. I also found that when I quit my job as a venture capitalist and became a full-time Forex trader back in 2004, 2003, guess what? Wow, the isolation. I didn't think it was a real risk. It was a huge risk. Especially, I remember those times. It's interesting, and my memories are in black and white because I traded in the middle of the night. So you can imagine how lonely that would have been. But this was before social media. This was before, YouTube. This was like no joke, before YouTube. This was when Amazon.com was a tiny little startup. And there was no books on Forex, so I checked Barnes & Noble, no books on Forex, except Forex Made Easy. And then I ended up going to the Stanford University bookstore just trying to find books on Forex. So that's kind of where I started with. There was nothing. And retail Forex trading was brand new. So anyways, so I thought, how do I find other Forex traders? And I thought, you know what? I'll just stream what I'm doing live, and maybe I can find some like-minded people to trade with me. And I will entice you with sharing and caring. So anyways, thank you for being here. Thank you for being a subscriber. Thank you for all the hard efforts that you do. This is a difficult gig, this thing called Forex, but if you get it right, it pays too much money. So maybe that's worth the risk. So hey, if you want to learn from my experience, good, bad, and the ugly, ask questions, take notes, get involved, participate in the chat, treat each other with dignity and respect. I'd also like to invite you to visit tradersway.com to open up a demo account. Maybe you're not used to MT4 or MT5. So you can go and download those platforms and practice, and your charts could look like my charts. You're like, yeah, okay, very cool. But ultimately, when you're ready to trade real money, you need to find someone not just with fast execution speeds, huge spreads, right? Huge swaps, narrow spreads. I mean, all those things are good and necessary. And many brokers don't have all that. I mean, I'm telling you, they don't. But ultimately, you're going to have to choose a broker that you trust. So if you visit tradersway.com, you can have all those benefits, but the biggest one is over time, maybe they can earn your loyalty and respect. And that is key to your success. So tradersway.com, they earn my loyalty and respect. Perhaps they can earn yours. Guten Morgen. How are you? What did you think about that Jay Powell speech? Wasn't that interesting how they were dovish? Then, so A, that was exactly what we talked about for days and days and days. And then what? Oh yeah, we'll probably taper, but not till the end of the year. Oh, that's what we've been saying. And a few other things, right? And you're like, wow, that's just spot on to our analysis. So very cool. So here's the thing. The dollar did get weak, which we were hoping for. But for those that are learning to study the bond market, in particular bond yields, yields did not rise. Okay. Hey, right on, Raymond. Hey, I miss you, buddy. Like, where are you these days? Huh? What's going on? Ray used to log in. I'm up 7,500 pips. And I'm like, ooh, settle down. But that's cool, right? Yeah. So namaste to you. So can we talk about the Fed? No, but Pastor, like Friday went down exactly like we talked about. Yeah, long story. I know. I want to know, like, the dudes you were talking with. I want to know. Yeah, I want to know. Anyways, let's follow up, huh? Rabin says a power outage. You know what? Yeah, a couple of days ago, I got 5 inches of rain in about less than an hour, like in a half an hour. I don't know if it was 5 inches, but it was amazing. They're digging holes in my backyard. We're doing huge projects around the house. We had heavy equipment, and then they load up the heavy equipment. There's these giant holes in my yard, huge, right? 100-foot long holes and trenches and stuff. And then they leave and boom, this huge torrential downpour. And now there's mud and everything they dug is collapsed and full of mud and water. And like, oh my gosh. So anyways, amazing because Louisiana, which is not far from Georgia, was hit by Ida, a huge hurricane, and it's going to go right past Georgia. It's going to go up, so it hits Louisiana, and then it's basically kind of follow the Mississippi around, and so not too bad here. No hurricane this time here, but hopefully for those in Louisiana, hopefully you evacuated. Okay, so let's go back to the questions here. Can we do a Fed watch tool align Powell's speech regarding tapering? But we already know. We don't need that, Lesso. Okay, so what do we need? And this is what I've been preaching with you. Okay? By the way, did you watch the speech live? I mean, my point of view, it came out exactly what I've been talking about. But I don't know if you agree or disagree or what. I don't know if you feel like going into that meeting on your own, that you were actually prepared. Did you say like, oh my God, this is cool, man? German, no, bond, sorry. Well, here's the market watch anyways. Okay. So here's the thing. We still need this to go up. And 1.31 is low. It's low. Okay. So people said, well, okay, the Fed's going to taper by the end of the year, but not now. Okay. You see, and that's what matters most. Put it this way. I let the news come out on Friday. I listened to the speech. It was all good. The market moved. It moved in the right direction. Great. And then I tried to catch it a little bit high, and I put tiny little trades on, trying to catch it, and then was ready to I was trading everything on 5-minute charts at that point, and was ready to add on if I got follow through. But as you guys know, there was no follow through, and I sat around for about 4 hours, probably a dozen pissy little trades. Nothing came through, and then the total collapse, right? But I didn't participate in the total collapse where everything came all the way back down pre-news. Well, good, because that's how I trade. I take shots when I can, but I got to get back and play defense. And defense is just as important as offense. So anyway, great. So then, time goes by and I take a look and there's no follow through here because there's still probably 3 months in which you can front run the Fed before the Fed pulls out. Okay. Okay. Robin says, what is your reaction? You need to get out of the way, Robin, right? The only way I think you could have traded it, Robin, otherwise would be to throw down trades before the news and let's say hours before the news, maybe a day before the news, and get your stop to break even and hope it goes your way. If it goes against you, like you thought the dollar was going to gain strength, you need to stop trading. Okay. The dollar weakened. And what I ended up doing is catching little pullbacks. And I mean, a few of them were up 20 pips and then they came down, like nothing. I got no traction and no real higher highs and stuff like that. And so I kind of did the opposite, where you should have got out for a quick loss and then waited, and then sold high way at resistance. And then eventually you would have got it to come down. I did the opposite, where I wasn't in, it spiked, I wait for pullbacks, I bought the dip, and then, and try to let it run through, and it never did. So that's how you need to do it. Okay? So if you were short, take the quick loss, and then, like a lot of these, a lot of the moves, I don't have the charts up now, but a lot of the moves, if you were doing like day trading and swing trading, a lot of the moves topped out at very, very close, if not exactly on pivot profit zones. And that's where you're like, okay, well, I don't want to trade just because of that, because Fed news is way bigger than some stupid daily pivot profit zone. But then if it does start to drop, not because of that, but in conjunction with being there, you're like, okay, I'll take a shot. So like you do one of these things. Let me get my drawing tool. So I did a lot of little things like this, and you would do the same thing where, let's say it was up, okay? And what you would do is if it moved up, okay, you would sell it here and put your stop just above here, okay? And if it comes down, you get paid. Assuming this is the pivot profit zone, profit zone up in here, right? So now you're putting together your counter trade, and your stops up here, and we're only talking about probably 18 pips, right? And you take it down, okay? I was doing the opposite, and I was buying it here and putting my stop here, okay? And it was up for a while, but never quite broke. And then this, and then I realized, and it just didn't work. Okay. But for everybody here, guys, if you're a bear and the market turns bullish, remember you only sell at resistance. If I watch some of you guys trade, you probably just make up some bullshit levels of resistance. I'm like, dude, what was that all about? You're like, well, like, settle down, man. Settle down. Where's the support? Where's the resistance, right? And that needs to be identified before the price action, not after. Mr. Kennedy says he traded exotics. I kept my eye on exotics, but I don't think I pulled the trigger on them because I don't like going exotic until I can get my G10 trades, right? Like if I got like 8 G10 trades going, now I'm going to like diversify by changing sort of the asset class, because, I got a couple, I got several dollar trades. I got several yen trades. I got all that's golden. So then I zip over and take a look at some exotics. Maybe I get 1 or 2 of those. Maybe take a look at some commodities, get 1 or 2, So you get a rand trade going, you get a peso trade going. Now they're at break even. Great. Now how about oil? How about gold? How about Bitcoin? That kind of stuff. You diversify and you build a basket versus 9 trades all on euro yen. Okay. So anyways, What my point here, guys, is for your dollar trade to get weak, you need to see this rising. And by rising, I mean 1.4, 1.5, 1.6. We don't have that yet because, remember, they didn't announce a taper. They did not. You're welcome, by the way. They were dovish, not hawkish. You're welcome, by the way. What did they say? Yeah, by the end of the year, it could happen. Well, that's not an announcement. And the other thing we learned is when they do taper, they're not even interested in talking about raising interest rates. So the media now says, oh, it's not going to be 2022. It might be 2023. You and I already know it's going to be 2025. We discussed it last year. The media is just, and their talking heads are still years off. It's amazing to me how wrong the market is. I just don't understand why they don't understand. Okay. So anyways, we learned a lot and a lot of things got confirmed. But right now, the bond market is still being bought up by the Fed and by foreign investors. So if you guys paid attention to the 10-year auction 2 weeks ago, it was the highest purchase of 10-year T-notes by foreigners ever. Ever. Okay? Now, if it's foreign central banks, why would they do that? To lock in 1.3, 1.4? No, to lower their exchange rate. Okay? Because remember, on their balance sheet, there's assets. And they have cash. Okay? And they have bonds. And of course, they have gold, for example. So if they turn cash into bonds, what happens to the balance sheet? They take $1 billion worth of cash, buy $1 billion worth of 10-year T-notes, and then put the 10-year T-notes on their balance sheet. What's happened? Nothing. It still balances. There's minus $1 billion in cash, but plus $1 billion in bonds. So nothing's happened, right? Except what? Now there's $1 billion more dollar or whatever, let's say Canadian dollars, right? If Canada did this, now there's $1 billion more of Canadian dollars in the global interbanking system, which means the supply is up and the value falls. And then, right? And that was converted into dollars, US dollars. So now there's $1 billion less in dollars in the global interbanking system. So the value of the US dollar goes up, the value of the Canadian dollar goes down, but the central bank's balance sheet hasn't changed. Okay? So if there was 1 billion of each, now there's less 1 billion in cash, but positive more billion in cash, and let's say there's $1 billion in gold, so nothing's changed. Okay? You see? Nothing's changed except the value of the Canadian dollar went down, or the Indian rupee, or the Israeli shekel or something, right? Japanese yen, right? China renminbi. Okay? So anyways, I think that's pretty interesting. It was the largest purchases by foreign investors for the 10-year T-note in history. And it was 50% more than usual. Cool. This is nice. So anyways, watch this. We want that to go up if you want to sell the US dollar. So remember, we're looking for central banking policy, but also market conditions. Okay, great. So this week we still have non-farm payrolls to worry about. And later on we have a Fed meeting. And then we're on the free and clear plan. And so I'm thinking yields will be going up by the 20th of this month. Okay. Delia, you probably have the $5 version, not the upgraded version. Would that be the case? Yeah, that's probably what it is, Della. Put it this way, it works. Okay, let's take a look. Building permits, yeah, that's good. The cool thing about real estate is they have to look out 5 years in advance. So that tells you building permits, negative, not good. All right, German unemployment tomorrow, good. That's important. We want to see a recovery there. Although I hear rumors that Audi is going to start building vehicles in the United States. What does that mean? Does that matter? Well, I'll remind you that one time I was hanging out with the senior vice president of BMW America. Was it BMW America? Yeah, it was BMW America. And so we're just shooting the shit. And I'm like, oh man, you guys are getting crushed on the euro. And that's when the euro was unbelievably strong and the US dollar was weak. And he said, yeah, we don't actually make a profit. By the time we convert the money back to euro and send it back to Germany, we've lost money. So it sucks, right? So the ultimate foreign exchange trade would be a German auto manufacturer saying, you know what, we need to build cars in America because we think in 5 years the US dollar will be weak and the euro will be strong. Now remember, strong euro means low inflation in Europe, which means in 5 years, Europe will not be much better than it is today. Okay. Someone was telling me that even though there's no cars at BMW here in the United States, that there's lots of BMW cars on the dealerships in Germany. Now, you can't just take those cars and send them to the United States, right? They're different. They're very, very similar, but they're also different. You can't sell the German car in the American market, right? So anyways, those cars are sitting in Germany, and it just kind of shows like there's no BMWs in the United States because we're filthy stinking rich relative to Germany, where most people are not filthy stinking rich. They're still suffering from deflation, from high unemployment, for bailing out the rest of Europe and so on and so forth. And those cars are sitting there. There's no brand new BMWs in America, and there's tons in Europe. And I thought that was kind of interesting. You're like, well, that's the consequence of the decisions. So back in 2008, when unemployment skyrocketed in Germany, they decided the government should spend less money and raise taxes. And it was a disastrous mistake. And Europe will continue to pay for this probably for the entire generation. Sorry. Why so gloomy, right? All right, GDP out of Canada. That's going to be nice. Okay. That's going to be nice. Kenyatta, great. Okay. You see, it's Australia, the Southern Cross, and the Southern Star. You get rid of the Southern Star and you have New Zealand's flag. Anyways, So Aussie GDP, very good, great. A bit backward looking, okay, but nonetheless, I recommend if you've gone through the macroeconomics course, you download it and then take a look at subcomponents C, I, and net X. Okay. Wednesday, more German news. Okay, retail sales, great. So that's now, that's current. GDP is backward looking. Okay. Unemployment is very now because it's updated month over month and such. So here retail sales are people spending money and all that kind of stuff. And remember, for people to spend money on stuff they don't normally, they're going to need disposable income. The question is, do people feel like they have disposable income? I don't know, but that will be one way to find out. Okay. Okay, German manufacture, British manufacturing. Are they making Rolls Royces or not? I guess we'll find out. Eurozone unemployment rate. Okay, great, whatever. Overshadowed by ADP. Another dumb prediction. So I've always said that this isn't real news. This is fake news. It's not fake news. This is the employment situation for small and medium-sized businesses, mostly small businesses. Now think of it this way, okay, ADP. It's for businesses that feel like they should outsource to a company instead of having an accounting and HR department that handles things like payrolls and benefits administration and other compliance issues that in the United States, there's just way too much. And it's a paperwork nightmare, regulatory disaster, and huge expense. And if you get it wrong, you're going to get sued. So a small business has to say, well, when do I hire full-time people to handle all this crap the government forces on me? Or should I just outsource it to ADP and write it off as a business expense? Well, there's at some point where ADP would be too expensive and you'd be better off hiring full-time employees to handle it. So you could separate it, right? So ADP doesn't include Apple, okay? But maybe a place that sells iPad cases. Maybe, I don't know. Okay. So there you go. Cool. ISM manufacturing. Okay, that's interesting. It's not a manufacturing economy, but it's interesting. I would just look at the employment subcomponent to that and see if manufacturing companies are hiring or not, and that would be inside, right? Is there still a lot of work signs in the United States? Absolutely every single business wants to hire. I was at the local grocery store buying a 6-pack of wine. I don't buy 6 packs of beer, I buy 6 packs of wine. And no joke, they even had a hiring booth set up in the grocery store. I'm like, I've never seen that before. Okay. On Bloomberg Radio, I listened to that in the morning, and there's a local glass manufacturing company in our city, and I've actually bought glass from them. Hey, you got to support local stuff, right? So I bought probably a dozen windows from this company that make windows, right? They're advertising on Bloomberg Radio for people to drive forklifts and pack up windows and load it onto a truck and work on the line. They're paying $14 to $26 per hour, plus $1,000 signing bonus, plus benefits starting on day one. So I talked to my wife about this a couple of days ago. I think it was Thursday or Friday of last week. I'm like, that company is hiring and they're advertising on Bloomberg. And she's like, well, so what? Well, first of all, they've never done that before. So they're really desperate. They're like, let's find any way. They must be already advertising on Google. They must already be advertising on, the job posting sites. They must be, advertising all the normal places. But now they're like, you know what? We're so short of workers. Let's find new ways. So anyways, I asked my wife, I said, how many potential out of work Yeah. How many out of work forklift drivers are sitting around at 6 o'clock in the morning listening to Bloomberg radio? And not just forklift drivers looking for work, but looking for work in my tiny little town. So now, forklift drivers that live in or near my tiny little town that just happen to be listening to Bloomberg radio at 6 o'clock in the morning going, oh, no shit, they're hiring forklift workers. I guess I should go. The $1,000 bonus sounds great, right? Like, I'm like, wow, that's quite a stretch. But they're willing to spend the money. Okay? So there's my answer. Yes, that's right, Robin. Robin says McDonald's pays for interviews. $50. Okay, Robin? And if you stay employed for 90 days, they give you an iPhone. That's the deal. Okay? But you have to show them your Instagram photos first. Uh-oh. All right. Aussie. Yeah. Again, real estate. This is interesting because it involves now and in the future. Okay? Which is interesting, right? Home loans. Do people have money and credit now? Are they buying now because they feel safe, or their house is so small, but they're making enough money and they feel good about the future, so they're going to upgrade, like stuff like that. If you don't feel good about the future, you don't upgrade, you hunker down. Chances unemployment benefits are about to end. Yeah, well, yeah. And I've seen conflicting reports. Some reports say the end of those benefits are going to force people into jobs. And then others the people aren't looking for work anyway. They're never going to work again. Well, okay, maybe when you get hungry, things change. Okay. Cool. I don't think you're trading Switzerland, but anyway, Swiss GDP and inflation. Great. Continuing jobless claims. This is interesting because that's up to the date. That's for, because it's the opposite of NFP and ADP. How many more people are asking for help? And the other ones are how many less people are asking for work, right? So anyways, that will be interesting. And then Friday, of course, NFP. And does it show it here? I don't know why it's not scrolling down. I guess they don't consider it high or medium, which is really shocking. But I believe at 10 o'clock on Friday, it's ISM services. And that is a big one because we are a service economy. And what you want to do is look at the employment subcomponent of ISM services, but also wages. So when you do ISM manufacturing, this one, when you do ISM manufacturing, look at the subcomponent for employment and the subcomponent for wages. Those are the two things we want. Are factories hiring, successfully hiring, and do they have to pay more? Like my window company, $26 an hour to drive a forklift. I don't know if that's good or bad, but whatever. And then same thing with services. If you're, I don't know, a junior investment banker working at JP Morgan, do they have to pay you more? And there's now, for these junior investment bankers and others like traders, the second and even third tier banks, the banks that you've never heard of, they have to pay junior analysts. These are the kids coming out of B school with MBAs. There's sort of the going rate is now called the Goldman Sachs rate. So a second and third tier bank will have to pay first tier prices to get someone in the door. And I thought that was really interesting. Okay. So that's that. What a lucky week. This is so good. Okay. What about next week? Can you start trading stuff based on news next week? Things like Bank of Canada interest rate decision. Did you guys hear the Bank of Korea raised interest rates? Yeah, Darko, I did get it. Sorry, it's unbelievably nuts here. But I don't want to build anything myself. I'm just not interested in that. That's not, I don't have enough time in the day to even think about building stuff. So I'm just not on that wavelength. Yeah, cool. Yeah, so South Korea did raise. And New Zealand got close. South Africa is going to. Okay. And now that, see, Powell did say he was going to taper. And he said it could be by year's end. I don't know if he said probable, but potential, which is different. Potentially by the end of the year. So that could be enough for countries like South Africa to say, all right, they're tapering, we got to raise interest rates. Why would South Africa raise interest rates if the United States tapers? Because when there's a taper, interest rates will go up in the United States, and that makes 10-year T-notes even more attractive to invest in. So why the hell would you lend South Africa money? Because now the competitive return is less. So let's say the spread was 6%. So if interest rates go up, it would be closer to 5. So let's say 5. Okay, so let's say the spread was 5, but because of the taper, interest rates, not Fed funds rate, on the yield curve, so in this case the 10-year goes up from 1.3 to 1.4 to 1.5 to 1.6. As that goes up, that means South Africa is less and less competitive. And people say, well, like, for example, maybe, how do I express this? Okay, like if you are doing a Sharpe ratio, there's many, like I'm just picking one because of the math involved. Okay, so many investors and finance people, the study of finance and flows and stuff. That's what finance is, not economics. Okay, so in the study of finance, in case we're doing a Sharpe ratio, the Sharpe ratio is a risk-adjusted return. So, like, a question is, should I invest into the United States 10-year T-note, or should I lend my money to South Africa? Well, what I showed you was, this is your return over the volatility of your investment or portfolio. Volatility. Okay? So this is if you invested into the 10-year T-note, your return would be 1.8 plus any appreciation over the volatility, right? Okay, great. Now, what about, does this work if I'm investing into South Africa? Do people look at it this way? Well, there's something missing here. You wouldn't do it when you're looking at the United States. If you're looking at investing in the United States, this is good enough. You're just saying, what's my return? What's the volatility? Okay? Well, if you're going to invest into South Africa, you're going to say, well, the return they're going to pay me minus what I could have made if I invested into a 10-year T-note, because this is the risk-free rate of return. Risk-free. I could have just done that and had no risk. Okay? So let's put this back to 1.5, okay? So at the moment of investment, if the 10-year T-note in the United States is 1.5, you can't just say, well, 6% is good for South Africa. Well, it's 6 minus the 1.5, because you could have just done that and had no risk. So if you're taking risk, how much are you being compensated? Well, you got to subtract out what you could have done risk-free. Okay, so if interest rates go up and up and up, and all of a sudden the United States, a 10-year T-note by the end of the year pays close to 2%, while this has come down, and sort of the real return, it's not quite right, but it's the same idea. The real return now for South Africa is only 4%, but your model might indicate that that's not enough. You're like, well, 4%, I can lend money to Ford Motor Company and get more than 4%. I'm sure, I haven't looked in a while, but I'm sure I can get a double B, or I think they're double Bs. I think I can get a double B bond. I can buy from Ford. I can lend Ford Motor Company, the car company, lend them money and get 5%. And that's, right? Or I can lend it to South Africa and get 6. You're like, wait. I'm just going to lend it to Ford, right? So anyway, so if interest rates are going up in the United States, not Fed funds rate, the tapering doesn't impact the Fed funds rate. The Fed funds rate is fixed at near zero. But interest rates are going up, or potentially will, okay? And therefore, South Africa will have to raise to compete, right? To compete. Where should I put my money? Like, I was going to lend it to Ford, but now this is 8. So that sounds pretty good. Okay? You see? And South Africa probably needs money. Now, right? Now, the big question is, does South Africa export enough stuff? Gold, diamonds, etc., etc. Okay? And some equipment is manufactured there, and some vehicles are manufactured there that they export to other African countries. But the thing is, when it comes to South African exports, do they export enough to the United States and Europe? That's the big question. Because remember Turkish lira? What was the problem with Turkish lira? Okay, they borrowed euros and they borrowed dollars. Okay, but they didn't sell stuff to Americans and they didn't sell stuff to Europeans. So when it came back to pay back the loans, they didn't have any euros. So they had to sell their own currency to buy euro to pay back the European loans. And that devalues the currency because now there's more lira in the global interbanking system and less euro. So their currency falls, which means the next time a bond payment is due, they have to sell even more of their currency, which devalues it. So imagine every 6 weeks, the currency devalued by 5% because they have a $10 billion euro loan to pay back. So now they have to sell even more lira to get the 10 billion in euros. And then 6 weeks later, they have to sell even more lira to get the 10 billion in euros. And all of a sudden, their currency is just tanking. And it's a crisis, currency crisis. And why is it a crisis? Well, in this case, Turkey doesn't do anything outside of the Turkish borders. They need to export a whole bunch more. They need to get their economy going and make stuff and sell the stuff to Europeans and sell the stuff to Americans because they get dollars, right? Who gets dollars? The Turkish central bank. So now there's dollars sitting on the central bank balance sheet. Now there's euros. So now when Turkey goes to pay back these loans, they already have euros. It's cool. So it gets exchanged domestically, Turkish lira to euro, and that's fine. And they just pull it out of the central bank. And that's what a central bank does. You go to the central bank. You're like, hey, I'm going to Paris. I want to walk around topless on a beach. Not Paris. Did I say Paris? France. Sorry. I want to go to the south of France and walk around topless. They're like, cool. You're like, I need some euro. They're like, all right, we exchange. And you give them some dollars. They give you some euros, and it's all good. It's what do you do if the bank doesn't have any euros? Well, now you got to go to, I don't know, Europe and get euros there. And that's going to be costly. Okay. So when it comes to like South Africa, which is not, I mean, Turkey is in just terrible situation. When you look at when you look at South African GDP, what do you look at to see if they're possibly going to have enough foreign exchange reserves in their central bank? Okay. Net X. That'll give you some clue. And then you look at their largest trading partners. So they might have great net X, but then you find out they do a lot of business with Zambia. Well, right? That doesn't help South Africa if they have a lot of debt in dollar. Okay? So they want to sell stuff. Now, the interesting thing is South Africa produces a lot of gold. And they sell it globally in USD. And then they bring the USD home, put it on the central bank. So that's good. That's another source of USD. And then they pay their workers in Rand, laughing the whole way. Oh, you suckers, man. Here's your Rand. They're just spinning. Where's all my $100 bills? I got a whole bunch over there. They're like, oh, look at this. But it's dollars, right? They get paid in dollars. And they're like, oh, thank you. And then go back to their workers. And they're like, here's your stupid Rand, you pathetic worker. Pathetic worker. Here's your Rand. And they get paid in dollars. It's amazing. So there was a time in history where the US dollar fell by like 20, 30, 40% during the financial crisis, but the Rand fell by 60%. And so gold exporters out of South Africa were never so profitable because the spread between the dollar and the Rand got so big that, again, the gold mining companies are getting paid in $100 US bills. And then paying their workers after exchanging it for Rand. But the Rand was now 20% less than it used to be, even though the dollar fell by 40%. So people are like, what's going on in South Africa? Well, employees got 20% cheaper per dollar. Amazing, right? So South African gold miners saw gold prices drop by 40%, and they were out buying Ferrari California, fake Ferraris, right? Fake Ferraris, Breitlings, fake Rolexes. Anyways, cool. So anyways, you might want to look ahead here and start planning to the future. RBA interest rate decision next week. Bank of Canada interest rate decision next week. A lot of GDP stuff coming out. Very cool, right? British GDP. Okay, some interesting things going next week. Beige book. Okay, very interesting. Because this beige book is one of the things that gets handed out at the Fed meeting, which is the week after, right? So there's the beige book. That's a little fat, don't you stink? Okay. Beige book. The blue book. And the green book. I believe it starts with the green book. The beige book is never actually discussed, but it's handed out before the meeting. Okay. So anyways, this is all about the Fed meeting the week after. Okay, you see? Cool. Yeah, I will do crypto, but you have to understand, if you don't know what any of this stuff means, you don't know where market participants are in their investment decision-making process, then just saying like, show me Bitcoin, tell me what to do with Bitcoin. Dude, you're just clueless, right? You got to know that stuff first. You have to know the basis of the investment market conditions. Okay? So, okay, yeah, we'll do Bitcoin, but you should already have a general idea of what should be happening now and when it should be changing. And that's the kind of stuff I'm trying to show you. That's why we're looking at news events, not just this week, really next week. Okay? So anyways, pound coming down, euro coming down, Swissy coming down. Yen was down for a while, which is good. Aussie, okay, collapsed overnight and now is stabilizing. Kiwi stabilizing. CAD's back on. Oil prices should be heading up, but they're not. So looks like not many rigs were negatively affected, I think is what's going on. At least the word on the street, but I haven't been able to confirm that yet. So let's take a look. Let's start with dollar pairs. Okay. Okay. Cool. Here's the news top. Okay. And this is what we're trying to play here. Did you guys play that out? Michael says, is it Ida? I don't know. Okay. Here's the next move, if that's what you're going to try. Okay. It was a very slow Asia. Very, very, very slow Asia. Okay. Take a look at Piggy. Of course, we want the opposite of that. So I already marked this out. Gee whiz, it's hard to grab that. There we go. Okay, so we're getting in there. There might be a buying opportunity here. Wait, I have this set wrong. Let me adjust this. Indicators. I'm a bull on this. There we go. So really, I have to choose. Am I taking tomorrow's trade and throwing away today's trade? Or, and the answer is, yeah, sure. Sure. Okay. So I was talking about how I tried Friday several times. I think I caught this one, and I think I tried here for sort of this move, and then lost here and lost there. You know, whatever. Just not big trades, but waited after the news. The other way was to throw it down before the news and pray. But, sometimes that works, sometimes it doesn't. And it's the sometimes I don't like about that equation. Okay? The other thing in the back of my mind, and if you remember, we discussed this, it's perfectly normal for this to happen before we have major liftoff. So don't just start saying, well, this was the third week and Wayne said this was going to go up. More than 24 times I've said this more than likely will happen, has happened. Maybe 50% of the time it double bottoms. Now we got NFP out here somewhere, and we got the Fed way out here somewhere in the future time horizon. And then it's free and clear. I don't see why I can't do this. Okay? So this is why I've prepared you guys. You got to know where your kill switch is. This is the stuff we talk about in the swing trading group. Predefine your kill switch. Okay? So in my algo program, right? In my algo program at Oxford, we had the director. So she was on the board, right? She was the director of risk management. And she always asks when they are analyzing algos and are preparing to take one that's been in testing, but now they want to put it into production. And she has to oversee, essentially the buck stops with her, right, on the algo. And she always needs to know the kill switch. And not just the kill switch, but the process and procedures, literally person by person, what happens if the algo isn't behaving the way it's supposed to? A fat finger trade, or it's just trading randomly, or just trading strangely. If it's not performing exactly the way it's supposed to, who will be notified? When will they be notified? How will the process work from this person to this person to this person? And at what point, what needs to happen, and how long will it take before the kill switch is hit, where it pulls the algo out, kills the algo? Okay? Well, you're an algo. You're making decisions based on statistics. Where's your kill switch? And this is the kind of stuff we talk about in the swing trading group. So if you like that type of discussion, you need to join the swing trading group. Oh, but it's $99 a month. Uh-huh. Okay. So anyways, no kill switch yet. Are you buying the dip? Okay. And that might be going on right now. Okay. Okay. And by the way, you may recall I had a trade on right in here, and this lower low here took me out. And it was I moved all my stops post here. Okay, because I could see it coming all the way back. So I'm like, so I think if I remember correctly, it was 1, 2, 3, 4, 5 pips. You're like, that's weird. Who does that? Okay. What would make you enter now? My buy button. That would make me enter now. Okay. Look, think of it this way. And you were supposed to have this planned out Friday, or worst case scenario earlier today, Mohammed. You can't make this decision now. Otherwise, you're probably being irrational. But if you told yourself you were going to buy it in here, then what puts you in? The buy button. There it is. Okay. Okay. You would have just bought it. You're like, well, I need a different technique. Okay, well then you drop into a smaller time frame. Okay. So at what point do you realize it's bouncing on support? And remember, I identified this as tomorrow's buy zone. Is it two M's? Tomorrow's buy zone. Okay. Or you might say, well, that's too aggressive. Okay, great. Cool. Right on. So you don't have that as a buy zone. You have it as a bounce zone. So you're going to look at this. And now you got this above you, but that's fine. You'll deal with that later. And maybe you buy a dip like that. Okay. But if you're trading a 5-minute chart, for example, if you day trade like the way I teach you to day trade in the day trading course, okay, you already have this lined up. It's a front run trade, not a problem. You hit it and you see a bounce. How do you trade that? Right there. There's the top, right? You grab a little Fibonacci. So think of it as Fibonacci. Okay. Boom. Gone. La la la. Okay. And you're like, oh my God, oh my God, oh my God. Well, look, your stop's right there. Here's your buy zone. Okay. Your stop is like 10 pips away. It's a scalp. Well, what if it comes back and I lose 10 pips? Yeah, don't cry about it. Okay. It's a scalp. Okay. Now, robbing and stealing's on the sell side. That's cool. Let's do it this way. This is your first opportunity, your second opportunity. Okay? So somewhere there, robbing and stealing, you're looking at sort of like that. Oops. Plan A, plan B. Easy. Okay. Remember, guys, if you're just deciding what to do today, like you're logging in now, you're like, oh, well, that looks good. You're not doing it right. This has made a lower low. I'm a bull. So I can buy at support, jam my stop, or just simply take a walk. Okay. So what's the big deal? Well, you're a buyer of a dip, or you're not a buyer of the dip. You're a seller of the rally, or you're not a seller of the rally. It's not that complicated. It's only complicated if you haven't made a decision, which just by definition means you have no idea what you're doing. Well, guess what? That experience is going to suck. Why don't you get a doctor that doesn't know what he or she's doing? Hey, are you a doctor? No, but I watch this guy on YouTube. He's really good. So don't worry about the operation. I've seen it a million times. Okay. So what are the choices? You're doing this, or you're doing this. Which one are you? I didn't. Okay, well, that's the problem. If you don't know what you're doing, you're not going to get consistent results. Darko says, I was planning the whole weekend. I'll see how it goes. Yeah. Well, Roderick says, now that was funny. It's the dry Canadian sarcastic humor, though, too, right? So I got to be careful because a lot of people don't understand it. So Hope's like, yeah, a green box. So here's like one of the things you could have done. Europe opened. Let me just double check this before I start changing things. God dang it, son of a... Just want to double check here. Okay. One of the things you could have done. See, this is the Asia Open. Like I said, I put a trade on here. If it wasn't euro dollar, it was pound dollar, I think. I can't remember. You know, I was watching spreads and all that kind of stuff. I mean, I sat here for hours and I threw down some little tester trades, some little feeler trades, and eventually got knocked out, as you can see. But here's the other way to play it. Okay. You say, all right, the market opened, boom, you put an entry, and then you're done. And you're like, well, that wouldn't have worked. Yeah, that's true. Well, I wouldn't have had a little loser there either. But if you look at some of the other ones, and this is the one I think I bought. Okay, you could have seen, like, in a similar fashion. I think I bought probably in here somewhere or here. You know, I tried to catch that. See, the other thing too is with the spread, you can't actually get the actual entry. It touches the entry here, but the spread puts you here anyways. So anyways, I could have just said, oh, buy down here and walked away. Okay, that's all. Sometimes that's great. Sometimes it's not great. Okay, that's all. So sometimes it's just part of your decision-making process, right? So I think on some of these, like this one, I think was a daily entry. So this was a perfect day, but the spread would have put you way up here, if not even higher. And I'm talking literally the first minute the market opened. Okay. All right. So I see this at this midpoint psych level of 50. And it was perfect. So I thought, well, that's one of these moves. Okay. But what I could have done, and I believe this is the bottom of the day, is I could have put a buy here or a, right? Let's say I could have put a buy here or I could have bought a buy here and just walked away and said, yeah, well, I want to buy an M2. The opportunity cost is the potential risk because it could just do one of these and never really come back, except for that fake touch, if you will. And if you're not sure what I'm talking about, you're like, Wayne, what are you talking about? How do you know there's a daily pivot there and stuff? Oh, well, I've been trading for the last 14 hours today. But anyways, so you go to daily pivot points. Okay. And there it is. There's the daily. Or you could do it this way. Day trading bullish. Okay. And you can see the open was here. And I think I ended up getting in here. But I could have just thrown something down here. And that's it. Okay. So I showed you on euro and I showed you on dollar. Euro and now on pound. This is coming down like this, so you might be bearish, but we're only coming down into the buy zone. Okay? So a lot of traders on Friday would have said, buy here. And that's where I think a lot of amateur traders miss things. They don't know where professionals are going to buy. So they see double top, lower low, lower high, lower low, they expect a lower high, they expect a lower low, they expect a lower high. They don't understand the fundies, right? They don't understand seasonality. and they're 100% rules based. So they're like, well, you have to sell this. But what I think a lot of amateur traders miss is they go through this excitement. And a professional trader says, oh, wow, look at the higher high. Wow, that's crazy. Wow, that Powell speech was so important. So important. Meanwhile, they're really just on the yacht drinking champagne with people that are far too beautiful for them. But anyways, and they come back over the weekend. They're like, yeah, you know what? I think I'll buy it at 137.50. And I'll buy another one at 137.25. And now they're done. They're done. And that might be true. I don't know what actually happens. But what I think is amateur traders get caught in all of this. And they think this is where the money's made. And then it does this. And then it does this. And then it does this. And you might find that this was good for you. But you also might find it wasn't good for you. But what if you knew that most traders just said, oh, wow, look at that. That's crazy. Wow. Okay, bye. Okay? And you might just be missing that. You're like, that was a buy. That was a buy. And we're golden. And tomorrow, if it makes a higher high, if we approach 38, you're probably going to buy somewhere between 38 and 37.50. And it'll make its another move towards 39. Okay? Okay? Yeah, their spreads do get better over time. So, right, so I was at my chart at 5 p.m. And many other market participants, they don't open till 6 p.m. Okay, so I was at my chart between 5 and 6:15, I think. And then I was at my charts again at 7:45 to about 10. So this is the open, and this is Tokyo. Tokyo, Seoul, and Sydney. Somewhere. And then this is the Shanghai. Okay. Just part of my day. Okay. But do you see how a lot of people they don't see this importance? Now, it might not be important. Currently, it is technically important. But if you're like Robin and you're a bear, well, this is a sell. Okay? But for other investors, this is a buy. And you're like, well, on the 1 hour, well, they might not be looking at it from a 1 hour point of view. They might be looking at it from this point of view, in fact. Okay? And what do they see? Okay, on a daily, we double bottomed. So let me mark this. Okay, that's it. Now this is a huge period of time ago for most retail traders. But what would a professional do if they were trading this double bottom? Well, it would bounce, giving green candles. Okay, slam into the 21, it would turn red, and you would buy the dip. Okay, you see that? So you're done. Great. So now what? Well, if you're going to use Fibonacci, you'd measure this out. And you would say your first target is going to be here. I might actually change this. I think I'm missing a 138 too. So I would have it like this. No, 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 no. No, 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 no. No, 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 no. Okay. If I was, okay. And that's part of your day trading planning process. You know where you are and where you're going. By where you are, where you are in the process. Okay. Okay. And one of the things you're looking at now, let me zoom in. That is zoomed in. Sorry. One of the things you're looking at now is you're looking at the previous low, the previous high, and 50%. Okay. You bought a 50% retracement of Friday's craziness and volatility, except now you're buying it without the craziness and volatility, but you're buying it based on the outcome of the Fed will likely, potentially, taper by the end of the year. All right, cool. So that moved us higher. So I'll buy the higher low. How about a 50%? Okay. How about the daily pivot? Okay. Yeah, fine. Well, who cares? You're going to be in it for 6 weeks, right? And here's the thing. A newer trader's like, what? Wait, I'm not even in it for 6 hours. Well, that is worth less than this. Okay? And the thing is, people are selling because they think this is down. It might be down, okay? And what you're going to do is you're going to sell this way. Just be very, very cognizant if that don't happen. Same thing with a bull that does want to buy this dip. Be very, very cognizant of if that don't happen. Because this 21 is legit as a bear. This 50% is legit if you're a bull. And then some people in this chat, and certainly some people not in this chat, are just doing something random, different, not a bull, not a bear, have no idea where you're going, where you've been, or why, and they're just trading. And what they're doing is they're liquidity events. They're providing liquidity. Sweet. They tried it on a weekly setting, right? Yes. In fact, Ryan teaches in the portfolio management group, they do a lot of analysis on the weekly. Okay? Faux show. The difference here now is the seasonality. So I think if you were a pure technician, you're going to do something like this. And that might be what happens. I don't think so, but it could happen because of the delta going out of control, geopolitical risk, and the Fed just not acting. Okay, those are the three big ones I would say. So if the Fed just never tapers, then the dollar is going to remain strong. And many other central banks will not raise interest rates. So there just won't be a lot of reason to do anything else except buy U.S. Treasuries. Or Grandpa Joe, and by the way, I've been watching him more now than ever. I've watched some of his press releases recently. Oh my God, he's slow. I mean, he's really slow. People are making jokes, and I've never really watched that much. Dude, this guy is slow. It's a bit shocking if you're not used to it. And he says things like, I gotta go now. I have a meeting. For real. I'm like, dude, you're president of the United States. Even if you're bullshitting the guy, you don't have to explain yourself. No, I really do have a meeting. Usually I'm lying to you, but no, for this time I really do have a meeting and I have to go. Like, dude, what are you talking about? And apparently he was at the FEMA thing just the other day saying that we're very prepared for this hurricane. And then a reporter puts his hand up to ask a question. And President Biden, the most powerful man in the world, says, I'm not supposed to take questions, but go ahead. What do you mean? Someone told you? Biden, don't you dare answer questions. Sir, yes, sir. So anyways, he takes a question and they're like, hey, this disaster in Afghanistan where it's a total cluster. And he's like, I'm not going to answer the question about Afghanistan. And then he leaves. I'm like, oh my God. Oh my God. It was funny. But I watched the one, it was the press conference from when after Afghanistan I was watching. And by the way, I'm not doing this because I'm a Trump lover and I hate Biden or I hate all Democrats or whatever. I swear to God, I'm not taking that angle. But I'm watching this press conference and there was the bombing in Kabul at the airport. It's total mess, right? So he does his little speech. And it was a little bumbling here and there and he comes out and you can't even hear him. You're like, what? Can you speak up, Grandpa? So I thought that was a little weird. But anyway, so we get through it and he takes the Q&A. And I can see why people are like, Biden, don't you ever do the Q&A. It was weird. I mean, you thought Trump was weird. Dude, it was weird. He would say things like, I'll answer your question. And he points instead of saying the reporter's name. And the reporter stands up and asks a question. And then he only half kind of answers it. And then he says, now to the guy I actually pointed to. I'm like, wait, you're still not addressing people by their names and their titles. But you also just recognize that the other guy just stood up and talked over out of turn. You didn't stop him. You're the president of the United States. So then you let the other guy talk. And then, so he answered that question. And then he says to the next reporter, now to the most interesting guy in the room. And I'm like, dude, you're the president of the United States. I thought you were the most interesting man in the room. You could just send your army back and kill everybody. Like, dude, we're here for you. You're the most interesting guy in the room. And the reporter's looking at me and he's looking at Biden and he's like, you mean me? And he's like, yeah, you. And I thought, okay, now here's the plant. He's going to plant a really silly question because I don't understand, like, Biden's doing inside jokes with the reporters? I'm like, why is this guy the most interesting guy in the room? And then anyway, so I thought this was going to be a fluff snowflake kind of question. And then he just kills Biden, just kills him, just crushes him. You said the buck stops with you. You're and does that mean you're responsible for the 13 deaths of of Americans because of your hasty, non-planned out, retreat or whatever? Like, it was really brutal. He didn't even call it an evacuation. I think he called it a retreat. And I'm like, holy crap, that was ruthless, aggressive question to the president of the United States. So why did the president have like positive banter with this guy? I'm like, oh my God, this was weird. Like, it was really a weird press conference. I'm like, holy crap. So I swear to you, I'm not having this point of view because I'm anti-political party. I don't love or hate Biden. I'm not like, I don't sit and watch Fox News and then yell at Biden. I know plenty of people who do that. I watch CNBC and Bloomberg. Okay. So I don't get into the politics of it, but I watched it because I had trades on and I was shocking. It was strange, man. I mean, I'm telling you, it was strange. I think there were Democrats going, oh, but trust me, there are plenty of presidents like George Bush, a Republican, right? They told him, don't answer questions because you're going to F it all up. And I swear to you, I used to trade during those press conferences too. And so George Bush would come out and he'd do a speech and he'd do an all right job. And then he was supposed to walk away, right? And then all of a sudden he's like, yeah, okay, I'm from Texas. I'll take some questions. I'm not afraid of you. And the whole room, like, you could hear the whole White House gasp and sigh like, oh no. And he'd take a question and then he'd say, oh, I handled that well. You'd see it in his body language, like, oh, I was a good boy on that one. And then he would lean on one hip, like now he's got this. And oh shit, the market would just collapse like, oh, he's going to say something stupid. And the market was already selling off. And it was really funny because you could watch it. As soon as he would lean on one hip, like, oh man, I'm doing a good job. I can handle anything. Ask me another question, son. You're like, oh my God, right? So, anyways, I'm not necessarily, anti-Biden, but if you go in indifferent, it was a strange press conference. It was. And then the way I look at it is, there's no doubt he totally screwed up the evacuation and the end of the whole thing with Afghanistan was a just massively bad, grossly negligent, hard to believe retreat. But then I realized, wait, when Hillary Clinton was Secretary of State and they were handling the Arab Spring, and, the White House was warned like on 5 occasions by their own embassy that they're going to be under attack. They're going to be under attack. There's a huge crowd. There's 10,000 people outside the embassy. They're coming over the walls. They're shooting our guards. Help us, help us, help us, help us. And then all of a sudden, the embassy, the walls were broken down, the gate was broken in, they went in, they shot all the staff, they executed the ambassador to the United States in his own embassy and burned it down. And I'm like, wait, that was Obama, Hillary Clinton, and Joe Biden. I'm like, oh my God, Joe Biden was in that cluster F too. And then there's weapons of mass destruction, the chemical weapons in Syria. And all of a sudden, there was a line in the sand like, Russia, if you go in there and take all those chemical weapons, we will retaliate. So the Russians went in there like, F you, and they took all the chemical weapons. And Obama had the line, right? He had the line in the sand. Don't you do this or we will attack. Then they did it anyways. We didn't attack. And I'm like, wait, who was in the room for that one? Wait, that was Clinton, Obama, and oh my God, Joe Biden? Like, wait, how about Obamacare, where they rolled out Obamacare to 100 million, to hundreds of millions of Americans? Who was involved with that one? Oh my God, Biden was right there too. Like, dude, if you were an American and you went through that, it was catastrophically bad. It was unbelievably, horribly, ridiculously bad. And again, I'm not saying this because I'm anti the party. I was there. I'm a small business owner. I'm intimately involved with this. This affects the life of me, my wife, my children. And it was a freaking unbelievably bad disaster. Oh, wait, Biden was involved in that. So I'm like, oh my God. Oh my God. Anyways. Yeah. Anyways. Oh my God. Now it makes sense. I'm like, oh my God. Yeah, he's capable. That was a bad decision with Afghanistan. Leaving wasn't a bad decision, but oh my God. Like maybe giving healthcare to people that need healthcare, that's not a bad decision. But the government rolled that out. You couldn't have made it worse. They must have paid people to make it bad. I mean, I don't know. It was so bad, it was unbelievable. So anyways, there you go. There's my apolitical take. If you're American, if you're not American, there's sort of an inside, and that's from a neutral point of view, or reasonably neutral point of view. I'm Canadian, dude, so I don't care. I can't even vote for the president of the United States, so I don't care. I just want to make money. But now I'm like, it was very plausible that went down that bad. There's definitely a track record of failure for those types of things. Right? I think that's Maida, right? Maida, yeah, and she's like, yeah, that's kind, yeah. Anyways, all right, cool. Yeah, yeah, yeah. All right, let's do some yens. Herschel Walker for president. All right. As a Canadian, yeah, I probably can, Pete. All right, cool. So what about this? Oh my God, I've tried multiple times on this trade, and I'm going to continue. And it's not. See, one of the things in the back of my mind is I think we're about 4 or 5 weeks early. Sorry, Hope. But it might give, right? But it might give some people a perspective. I don't know. Or maybe it's just a rant. Okay. But Hope, sometimes I'll go on a rant and I'm okay with it sometimes. I try not to do it all the time. But I remember, like, I'll give a great example. I spoke for 2 days in South Africa about how to trade Forex. And then at the end, I took Q&A and I'm like, all right, so who has questions? Hands go up. All right, you. Is Donald Trump going to, like, nuke everybody and blow up the world? And, is he going to attack China? Like, it was just all questions about Trump. I'm like, dude, I just spoke for 16 hours on Forex. Trump. Next question. What about Trump? So, I thought it was funny. Yeah. Yeah. Oh, well, no, Hope makes her point, and it was good. Yeah, Hope's cool. So anyways. Okay, this is what I'm trying to do. Well, it is psychology, but so I was just sharing that I'm pretty neutral on Biden. Remember, I told you if he wins, he's just going to be Obama light. And I already know how to make money under the Obama administration. We had 8 years of practice. So I'm like, I'll just do that, right? And I watched some of the debates and stuff, and I'm like, okay, Sleepy Joe. And he's the whitest guy I've ever seen, so I'm surprised he won. He's just, he's white even for white people. So it was just, it's funny, and he looks like a politician, which is off-putting for me. So, okay. But I never really watched a press conference, and so I watched an important one because it was affecting my trades, and I was really surprised how strange. It was strange. It was really a strange, so I think that's relevant. Okay, all right, good. So my yens are Oscar Mike. Okay, this is a better one, and I'm wondering about oil because this wasn't moving well in Asia, but now it's moving well, which is interesting. So I want to go back now and check commodities. Yeah, yeah, sure. No, right? What? Who was the first election? I don't know. Anyways, let's move on. Plan A, Plan B. Oh, it worked. Yeah. Hey. Plan A, Plan B. Straight in the kill zone. Cool. So now what? Yeah, this. That's what I'm looking at now. You are not alone. This is going to take forever if I draw all these. Okay, let's just do the other one. Where's the midpoint? This one's just doing range. Okay. You can see the reason I put these two time frames on here is you can see on the short run, let me do it this way. On this time frame, there's an acceleration. You see? It's up, but even more up. So the way I would plan this is plan A is still here, right? And then plan B would be way back down here. So are you guys front running that sucker? Okay, so gold doing well. Bitcoin, well, you got to trap it here. Okay. It's interesting that that didn't go anywhere. Okay. Oh, wait. Marina says, Wayne, oh, I see what you mean. Not here in YouTube, but here in South Africa, way before Trump was elected. Well, I remember taking questions about Trump right off the bat. So was it during the election? So the part of the Q&A is true. I don't remember what year it is or part of the political cycle. But maybe the question was, if Trump's elected, is he going to invade South Africa or something? People are so scared of Trump, and it was really funny because, you know, he sets them up, you know, he's nuts, right? He scared the crap out of people because he seemed unpredictable. But then again, I tell you, if you take a game theory class, now I don't think he studied game theory, but he's a businessman, right? And I think indirectly, he's learned those rules, the same rules of game theory and negotiation, and when to go in and when to pull out and when to renegotiate and when to do this and when to do that. Like, he would fire people. So if you have to fire people, you can't, right? So anyway, so he did a lot of things that made a lot of sense, but it scared a lot of people because you're like, dude, he's willing to go all in. And I'm not, so it scares people, right? Are they buy zones? They're support and resistance zones. So, for example, you cannot buy here, so that would not be a buy zone. You cannot sell here, so that can't be a sell zone. Okay? Now, I guess we need to do Ripple. Okay. Let's start on a high time frame. Okay. Maybe we'll go a little farther out. Just trying to line that up. Maybe you want to do a fib on this thing. It's about the same. Okay, what are you thinking? Probably back down to 1. Now, Peter's been trading this, I think it was for 27 or something, right? Maybe even lower, huh? Peter has been telling me get in on it well before even this. So even much less than even 20 cents. But I remember this, and then I remember that. Like, whoa, 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 whoa. But yeah, so anyways, could somebody declare this as the higher high and then this is the higher low? Yeah, for sure. Yeah, Peter's like around 18. Yeah, I remember that. But Peter, I think you were sending me emails, golly, what, a year before this? Yeah, Ingrid says, isn't this one in the news with the government? Yeah, so you can't trade this right now here, but you can trade it in other places. Okay. Now, I'll talk about WTI. I don't know if I did before, but I want to talk about it again because one of the things with a hurricane, if it hits Texas through Alabama, okay? Right? So in there, you have Louisiana. You got Mississippi. That's Missouri. Is it MI? What? Anyways, Mississippi, okay? When you hit in here, if I recall, there's close to 4,000 oil rigs in the Gulf, okay? So if there's a huge hurricane, they have to shut all this down before it gets hit, batten down the hatches, evacuate people, and then come back and at least reverse all of that. But potentially there's damage, and it could take that rig off for weeks. So the impact to supply, even though it's short run, can push oil futures up. I think oil futures kind of went up Thursday and Friday, and then we found out that there wasn't much damage, and now prices are back down. And that's what's going on here, but it doesn't change the fundamentals, okay? This was in the short run, and, you know, this will find an equilibrium point and then maybe work its way back up by the end of the year. In particular, if it's a cold winter. So I don't think there's going to be any more hurricanes. Okay. All right. I don't think there's going to be more hurricanes. So, so now it's going to be how cold the winter is, because that'll increase demand for heating oil. So this is where you study, is it El Nino, is it La Nina, and how should that impact things? And, you know, you can have some skill on that. Right now, you might want to just look for support and be a bull or be a bear. See, you can see that that might be an interesting price because of this, 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 okay? And because of the moving average, okay? If you're a bull. If you're a bear, what you're foreseeing is there will be a breach, a drop to the 55, probably up, and then probably down. Yeah, that's right, Jim, but ultimately I'm indifferent, and I expect MT4 will just stop being used, and I'll just switch over to MT5. It's just I don't really care about things like social trading and getting signals and all that kind of stuff. So there's never been a reason for me to switch. Yeah, I just don't care about those things. But at some point, I don't think as a corporation it makes sense to, support two, right? Have two different servers, have two different setups, have two different sets of code, two different everything. At some point, it just won't make sense, and you're going to want to phase that out. Okay. Well, Barry says, me too, Wayne, I prefer MT4. Well, like I said, I don't really prefer it. I don't really care. And there's no reason to switch for me. This works just fine. But I anticipate it at some point I'll switch, and that'll be that. I could just switch today if I wanted to, but I got other stuff going on than switching MT4. So so I'm really I'm indifferent. Falls on the indifference curve. Will the U.S. ever do business with Venezuela again? Not under the current administration, but I'd love to buy beachfront property in Venezuela. Just not today. All right, so we did the calendar. We talked a bit about the Fed on Friday. We did dollar pairs, yen pairs. We did a crypto. We did some commodities, gold and oil. I think that's a pretty good day. So I guess that's it. And I'm looking at it. Oh, and I did my rant. That's good. Got that out. So that was 2 hours. Didn't seem like 2 hours, did it? Yeah. I guess you're saying, well, it was 2 hours, but you only said 45 minutes worth of interesting stuff. Okay. All right. Well, I apologize. Hey, man, I still have to put my life down at this desk and stream. So if I babbled on today, dude, try it for 20 years. Sit and talk for 20 years about the same topic. Try that every day for 20 years about the same thing. Once in a while, you might ramble. Once in a while, you might put your foot in your mouth. For sure. Right? But the cool thing is, you're good people. You roll with me. I like that. I appreciate that. Sometimes you guys give me feedback. And I hope you believe I take it and I try to improve with it. I try to learn. I try to grow. But I'm always going to put my foot in my mouth only because my mouth is moving and it happens. I mean, imagine that. Can you imagine being recorded 6,000 hours a year? How many times would you say something wrong or inappropriate or silly or I don't know. Maybe it's just me. So anyways, but I got you. You guys are good. You guys are good people. So peace on earth. May the pips be with you. May our profits be above average. I'll be here tomorrow. I'll be here on Wednesday. I'll be here on Thursday. And then on Friday, I will be over at FX Street to do that webinar, which I've been doing for, what is it now? 16 years, 17 years? Steve's like, I agree with you regardless. I like the regardless part. Like, man, that just totally sucked. And that was way too long. And what a babble and what a rant. What's the point? But I totally agree with you. It's just funny. So anyways, I'll see you guys tomorrow.